Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and usually I'd be joined by economist Stephen Koukoulas. The Kook's on a well-deserved holiday for a few weeks, but I'm pleased to say we've got another Fear and Greed regular stepping in again this week. Cherelle Murphy is the chief economist at EY. Cherelle, good morning.
Good morning, Sean.
So much going on in financial markets. Not sure where to start. Maybe we start with the Aussie dollar. Now, Cherelle, you may not be aware, but in 3 weeks, I'm going to the US. Really excited about what's happened to the dollar.
As a daily listener, Sean, I could not avoid that fact, but thank you for reminding me again.
I might have mentioned it once before. You're right.
Yeah, well, I'm sorry about the Aussie dollar. It's not moving in your favor. Down briefly, actually, below 62 US cents on Thursday last week, which was pretty low. We haven't seen it there since the first days of the COVID crisis, and prior to that, probably back to the GFC, actually. So it is quite low. And that was in response to, again, the US dollar moving higher. And the US dollar moved higher because the US CPI inflation data was so strong. So core inflation up at 6.6% in that economy, which is a 40-year high.
Wow.
So the markets took that as an indication that the Fed is going to continue with its aggressive rate hikes, maybe 75 basis points in November and 75 again in December. So it's looking very much like the Fed has to continue to go. The Fed has indicated that it's going to quash inflation. And so US dollar goes up, Aussie goes down.
Fair enough. So what's going to happen there?
Good question.
Come on, I'm going in 3 weeks.
Well, I wouldn't be betting on it getting back to 80 cents anytime soon, is all I can say.
Righto. The other news out last week, National Australia Bank business confidence, again, zooming, and consumer confidence, again, not so good. That's the Westpac Melbourne Institute, of course.
Well, actually, business conditions were the thing that went up, whereas business confidence went down. And I think that's interesting because it's showing the difference between now and the future. So in other words, now businesses are feeling pretty good. You know, a lot has been going their way. They've had strong customer growth. Conditions are ripe. They're, clearly kind of having problems with that as well, mind you, with skill shortages and getting up to capacity. But anyway, business is booming at the moment, but they don't feel like it's necessarily going to continue at this pace into the future. So that's why business confidence, I think, fell. And why is that? Well, clearly there's a lot of headwinds in front of us with interest rates going up. Therefore, the potential for the consumer to ease off a bit. That sort of, I guess, the sort of geopolitical environment feels a bit rough at the moment. So I suspect that businesses are feeling a little bit more worried about the future.
Okay, now the week ahead, we've got labour force figures for September. What do you expect?
That's right. So the forecasts from market economists across the board is for the unemployment rate to remain unchanged at 3.5%, and that participation rate to remain up at 66.6%, which is a record high, if I'm not mistaken. So, in other words, it remains really strong. The market expectation is for about 27,500 jobs to have been added in the month of September. So we kind of continue with that strong labour force story, again reflecting those really positive business conditions and the fact that there is no shortage of jobs out there.
Okay. RBA minutes are also out tomorrow. Just the fact that the Reserve Bank went 25 basis points, not 50 basis points 2 weeks ago, make these minutes kind of interesting.
They do, and it'll be really interesting to see a bit more depth into the decision-making there. We know that the Reserve Bank, in its one-page statement immediately following the meeting, highlighted the deterioration in global conditions, which perhaps is definitely one of the reasons, let's face it, that they took their foot off the brake just a little bit. So to sort of get a better understanding of that and how they think that flows through into the domestic environment and domestic inflation will be really interesting. So we'll definitely be reading those with interest.
The other big event this week, geopolitical event this week, is the National People's Congress in China. Xi Jinping presumably is going to get voted back in for a third term.
That's right. I mean, this only happens once every 5 years, so it's certainly a big deal. When we look at the backdrop, I guess, in the Chinese economy, it is certainly one that is weakening in, as you say, but in an increasingly fractious world as well. So the COVID zero policy there has also it's clearly been one of the reasons that economy has been softer. That the real estate sector is weakening as well. And then there's moves that the Chinese economy has been coping with the Biden administration's restrictions on the export of technologies to China. It's a really interesting environment. So certainly one that's important to us, given China is, of course, by far our biggest trading partner.
Cherelle, enjoy your week.
Thank you, Sean. You too.
That was Cherelle Murphy, Chief Economist at EY. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.